How successful is the M&A activity of Elis in reality? In this video I'll share with you some insights that surprised me as well. Hi, my name is Christian Wurzelball. I support the textile service industry with management training, know-how in textile service 4.0 and practical hints that I can implement right away. So if you are new on this channel, then hit the subscribe button. There are more videos to come, and I'll try to make a valuable contribution to the industry. One of the issues is that you want to know about the competition in the market in general, and the point is that there are not so many public traded companies around. So Elis is one of these, and therefore I want to make a video about some analysis of Elis and now about the M&A activity. But first, a disclaimer. This analysis is based on the data of Elis. Of course, I trust this data, it's audited, so I have no reason that there is any mistake. And there might be typos of myself and misinterpretations, so I do not want to be liable about anything. So you need to do your own research if you want to do it. And this video is not sponsored. I am neither long nor short on Elis, and I have no financial interest. So it's my personal opinion, my work that I did because I'm interested in the topic and I want to share it with you. And this is not financial advice, of course, so I do not advise you either to sell or to buy Elis shares or bonds or whatever. So this disclaimer, and if you are interested, then subscribe to the email list. I have made an extensive Excel spreadsheet, and you will get the whole spreadsheet and also some instructions on how to use it if you subscribe. And then you can check everything yourself, and you can also make analysis yourself. Yeah, so why do we bother about it? So there, when you look at the share price of Elis and you compare it with the companies of similar size in the French market, then Elis actually outperformed them a big deal. So until 2018, Elis was outperforming the market, and afterwards something happened, obviously, because right now it's underperforming. So when you have bought Elis right here, then you're actually probably something like here. So Elis is underperforming the market. And the question is why? And I think one of the reasons is in this video. So stay tuned, and again, subscribe to the channel and like and post and make a thumbs up if you like the video. So first, where's the data from? The data is from all the annual reports from Elis, and in each annual report you have changes in the scope of consolidation. So if they buy new companies or if they dispose a business, then of course the scope of consolidation of Elis changes, and this is represented in the annual report. So you get for each of these companies, this is just one example, a small statement about the transaction, so you know when was the transaction. So in this case, March 13, 27. Then who was acquired, and what was the revenue of this entity before it was acquired, and how many employees in many cases. So this is the data, and I compiled this data into a spreadsheet, and yeah, you can look it up yourself. It's a nice one. So there is the year and the date and the name of the company, in many cases, the city where the company was located, the country, which is important, and then the revenue and employees in some cases, and the number of plants in some cases, and then also the industry this company was working in. And so this is the basis of this video, basically. And then you have also in the same section a table in the annual reports, and in this table you get the following information. On the one hand, you have an accumulated balance sheet, if you want to say it. So how you arrive with the fair value of the targets, but this is not for each company, but only for each country. So you have for each country more or less the assets at fair value and liabilities on fair value, and then so this is basically the fair value, and then you have the purchasing price, and then there's also a statement how much was the contribution of these acquisitions of this year regarding the revenue of the current year, and if it were if this transaction would have been done at the 1st of January, how much additional revenue would have been there. So you have this for revenue, for EBITDA, and for operating margin and operating income, and in the last few years also for net income. So what I did then is to add this information as well on this spreadsheet. Yeah, so that's the analysis. Yeah, it took me, I don't know, 6 hours or something. And then I need to debug it and analyze it, so it's probably something like 15 or 20 hours of work. And the findings are that there were about 88 transactions in the last 9 years. So there are a little bit more targets because some of the transactions are combinations of companies. So it's probably something like 95 companies that they acquired over the last 9 years. So about 10 on average a year. And there were about 43 companies less than 3 million in revenue or less than 5 million revenue in France, which is important to mention because these companies are not represented. These companies are represented in the organic revenue and not in the M&A revenue of Elis. And then, of course, Berentzen makes up about 78% of the purchasing price of Elis that they paid over the last 9 years. And the total purchasing price was 3.5 billion. And they paid quite some goodwill, so it's 3.2 million in goodwill. And the revenue of these acquired companies is about 2.1 billion a year. And all these companies, or most of them, have been very profitable because the average operating margin was 12%. Yeah, and then the industries that these companies serviced. So in the beginning they had some industries in food and beverage and so on, but they discontinued this. So this is basically not current anymore, no current information there. What's still current is that they heavily focus on healthcare, on hospitality and healthcare. And they focus also on industry, and they buy up every clean room company that is around, which is not much because the market is small. And in recent years, they have also focused on meds. And especially in France, they bought pest control companies. So this is a French issue. So that's basically the focus, which is not a big focus at all. So they are buying all over the industry, mainly focused on healthcare and hospitality. And then the multiples. So the purchasing price times the tangible net assets. So sorry for this term. This is not an official term. It's the net assets at fair value, as Elis represented, but then I deducted also the intangible assets of the target company. So if Elis bought a company that has already goodwill on its books, like when this company has bought other companies in the past, for instance, then some of these targets had quite some goodwill, and these intangible assets are included in the net assets of at fair value. And personally, I would like to deduct it because it's not tangible, and therefore, when you just take the tangible net assets, it's 12.3%. Times the multiple, and then 1.6 times sales, 14.2 times operating margin, and 6.1 times EBITDA, and 17.6 times net income. So that's the and these the last two are pre-COVID. So I did not include the year 2000 because this had an impact there. So in reality, they pay quite a high price to the seller of the companies. And then, as I already mentioned, there were 43 transactions, small M&A. So this is the whole list of small M&As, and it's all over the place. Of course, it's many of them are pest control, but it's also hospitality. It's even healthcare and industry and so on. And these are actually included in the organic growth. So the organic growth of Elis is about consists of organic growth, like new customers, like price increases and so on, but also about 0.4% of this organic growth is actually M&A. So you need to deduct on average something like 0.4%, because I think even small M&A is still M&A. Yeah. It's not that you get new customers, you are buying companies who have already customers. And altogether it's 63.7 million in revenue, so it's not much. And the question for me, it's really, might be a matter of taste, but the question is whether this is really meaningful. Yeah, and then you have also the issue of the revenue impact of the acquisitions. So when you, for instance, if you buy a company with 12 million in revenue, just as an example, then you buy it in October, then you would have 3 months of this company, so a revenue of 3 months in the first year, and the next year you would have a growth due to this acquisitions for 9 months, because the revenue of October till December is already an organic revenue in the year 2018. And then of course you have also organic growth. So on the top of it you add organic growth. And if there is a currency translation issue like that they had in Brazil especially, then of course this is so organic growth increases revenue, and in most cases, because in most cases currency translation decreased revenue. So when you have a revenue differential between 2 years, then you need actually to take 3 parameters into account. On the one hand, you have M&A, then you have organic growth, and then you have also currency translation, which most of the time is negative because the euro is still a hard currency, at least compared to the Brazil real. And then you end up with the impact of M&A on revenue growth. So this white line here is basically the M&A. So you have here the M&A. So when you buy a company, of course, you increase your own sales. Yeah, that's one of the purposes why you buy a company. This is the revenue increase through M&A, and then this is here, the blue one is here, the actual revenue of Elis. So you can see that basically the revenue increase was more or less the same. It was to about 85 to 90% due to M&A. It's just here, in this year actually, the first time that you have in 2019 and greater organic growth. And then of course you had COVID-19, so this is a different story. Has nothing to do with M&A. So this chart shows that about, say, 85% of revenue increase is due to M&A. And the organic growth is slightly above 2%. So it's probably 2.3, 2.4% is organic growth per year, which is slightly above inflation and GDP. So, and then this is really interesting. Then I tried to make the same with the operating margin, and so you see the operating margin of the acquired companies that they contribute to the consolidated company of Elis. So for instance, when we start in 2012, they started with an operating income of 224 million, and this 224 million already includes the M&A activity of the current year of 400,000 euros. And so 1.5 million of this year, of the acquired companies of this year, so the rest is then added in the next year, because they bought the companies probably something like in October. So you have a part of this impact on operating income in the current year, and the rest was for the next year. And then of course you have acquired new companies in the year 2013, and 3.4 million, they say, is also added here. So 3.4 plus 1.5 makes 4.9, and that's the difference here. So 224 plus 4.9 makes 228.9. So that's basically the calculation of adding to the operating income of 2012, always the operating income of the acquisitions of the respective years. And then you end up with an operating income with acquisitions, with M&A activity. And this is actually very interesting because you see that the operating income that they bought with M&A is actually more than they actually represent as operating income of the group. So this is this chart. So the operating income with M&A is actually higher. So the operating income, this here is M&A, and this is higher, and the delta, the difference is basically here. So that's the difference. And they had an improvement here in the 2019. That was actually the only year with an improvement. And then, of course, you have COVID-19, which is a different story. So the reason is either currency effect, which is definitely the case with Brazil and to a lesser extent with Colombia and with Chile. But there is some currency effect. How much? I really have not had the possibility to get this information. And on the other hand, there might be a structural problem. So normally you would expect that when you buy a company, that 1 plus 1 is not 2, but it should be 2.4 or 3 or whatever. It should be more than 2. In this case, the question is whether there's a structural problem and 1 plus 1 equals 1.8. So I don't know. This needs to be analyzed in the future, and also it's interesting then how it will turn out in the future after COVID, because here is actually the level of operating income that they should at least reach in order to break even with the M&A activity. Yeah, so that leads me to one statement whether the operating margin is a meaningful metric at all. It's the profit before interest and tax. So that's, in this case, it would actually be earnings before interest and tax, EBIT. But it's not just EBIT, it's also before amortization of goodwill. And I see this a little bit critical because when your business model is that you acquire many companies and you acquire customers, then you need to depreciate the customer list. So I think this is actually, for my personal taste, not the best metric in this case. And then, of course, you have other operating income. So, and other operating income are also restructuring costs. But here again, if you have restructuring costs because you have acquired companies and so on, and you make an M&A activity every year, then the restructuring cost is actually part of your business model. And therefore, I see this also a little bit critical here. So I would rather prefer to have just earnings before interest and tax, but this is not part of the information regarding M&A. Yeah, so, and then Brazil. They bought for 600 million something, many companies in Brazil. And the revenue at the time of acquisition was $250 million. So, and the point is, the Brazilian real has now devalued 46%, and therefore the original revenue is actually only is almost half of, so the current value is almost half of the original value. And the original sales multiple was already 2.3% times of revenue. So this used to be already very high. And then, of course, if you do the calculation with the new re-evaluation of the original revenue, then it's ridiculous. So they have made some adjustments and accrued some losses because of currency devaluations, and this is mainly most probably due to the purchasing price that they paid for the assets in Brazil. There has been some weakening also in Colombia and also in Chile, but not to the same extent as in Brazil. And the acquisitions there have not been the same value, so it's mainly a Brazilian issue, but it's all over Latin America. So that's the point when you take hard currency and low interest rates in euro and you invest it in Brazil, then you have the risk that you pay too much, obviously, for the target, and you end up taking a currency risk. So the summary of this video: on the one hand, Elis is an acquisition machine, and this is also in the positive sense. So they have some know-how in making acquisitions, and they have been very successful to consolidate the European market. So they have their 25% market share all over Europe, and they are also market leader in Latin America. So this makes sense. So this is actually a good one. And what I see a little bit more critical myself, but maybe it's a matter of taste, they have no focus within the industry. So there are other companies like Cintas or many other players who focus just, for instance, on industrial garments and make the acquisitions there. Elis is all over the place. So they buy healthcare, hospitality, industrial clients, whatever, even mats and pest control. So there is no real focus on the textile service industry, so they buy everything up that is within the industry. The organic growth of Elis is fair, so it's not bad, but it's not good either. So when you compare it with Cintas, for instance, Cintas has about 6 to 7% a year, and Elis is about 2.5%. So they are probably above GDP, and but not much more. And the price of the targets is high, which is nice for the seller and bad for the shareholder of Elis. And the acquisitions of Latin America seem overpriced. So I think that they fell into the temptation to buy the targets with cheap money from Europe. And then you have the need for further analysis, because the operating income effect, the M&A effect on operating income, is not so clear to me. And then you need also to analyze the cash flow, because the operating income itself is probably not the best metric to see the success story of the M&A process itself. So that's my take on it, and I have I want to make at least 2 more videos regarding this topic. On the one hand, to talk a little bit more about what I think are the pros and cons of M&A in the industry at large, and especially for Elis, because there is more data there. And on the other hand, also a little bit more technical explanation of the spreadsheet that I made. and some insights there on the different industries and countries. So if you're interested, then subscribe to the channel and give it a like, because YouTube then sees that you like the video and spreads it more around. And subscribe to my email list and you'll get the spreadsheet and the data. See you in the next one. Bye-bye.